Hi all. For today's session, the topic to be discussed is journal entry. Just an introduction to the term. It is the core of accounting transactions. That is, recording of financial transactions happens with the help of the term journal entries. It is the building block of the whole accounting transactions. The first thing to be done before proceeding with accounting is writing or recording journal entries. This is the first step. It is used to record financial transactions as and when it is required. Now, it is the process of recording transactions already discussed. It usually makes use of the term known as double entry system. That is, there will be a minimum of 2 entries for each transactions. That is, for a debit, there will be a credit. Or in other terms, to receive something of value, something should be given. That is, giving aspect and receiving aspect is there. For example, purchased a computer. For purchasing a computer, cash is to be spent. So computer is received, receiving aspect, and cash is given or giving aspect. It's an example of double entry system. And the provision of double entry system is followed by journal entries. So we can have a look at the sample transaction. Transaction is Mr. A purchased furniture worth ₹1,000 for his business using cash. That is, by paying cash, A bought furniture worth ₹1,000 for doing his business. And how to record journal entry is given here. Furniture is receiving in. This is an asset, so it should be debited with ₹1,000 and cash is given out. So cash should be credited since it is also an asset. 1,000. ₹1,000. So furniture account debtor 1,000 to cash account. ₹1,000. And write the narration that is purchase furniture. This is a sample on how to record a transaction. We can look on with other transactions in the coming area. Let's look at the format of recording a journal entry. It will have date, particulars, LF or ledger folio, debit amount and credit amount. So under the date column, just write the date. For example, 29th May 2023. And in the particular area, write what is happening. For example, discussed previously, purchase furniture. Furniture account debtor to cash account. That thing should be written here and write the amounts accordingly. Then explain the term. The entry using narration. And the narration should be given in brackets. And let's discuss a sample transaction of a company. That is, journalize the following transactions in the book of Mill and Trade Limited. And the entries you can see: commenced business with cash ₹10,000, deposited into bank ₹15,000, bought office furniture ₹3,000, sold goods for cash ₹2,500, purchased goods from Mr. X on credit ₹2,000. And the other transactions are: sixth one, sold goods to Mr. Y on credit ₹3,000, received cash from Mr. Y, paid cash to Mr. X, received commission ₹50, received interest on bank deposit. The solution is here. The first transaction was started business with capital, ₹10,000, and the entry will be cash account debtor ₹10,000 to capital account. Since the date is not given here, there is no need to write the column date. So for bringing the capital, that is for starting a business, capital should be brought in. And the entry for the same is cash account debtor to capital account. Here the amounts given is ₹10,000. So write the amounts accordingly in the columns debit amount and credit amount. Next one is deposited cash into bank. So bank account will be increased. Increased in asset should be debited. That's why bank account is debited with rupees 15,000 and cash account is credited with rupees 15,000. Bank account debited to cash account. And the narration is being cash deposited into business. And for the previous transaction, also write the narration that is being capital bought in for starting a business. You can write narration in your own words, provided it should be correct. And the fourth one is furniture was purchased for rupees 3,000. Furniture is an asset, so furniture account debtor rupees 3,000 to cash account rupees 3,000. Assets should be debited. And when assets are decreased, here cash is decreased. By paying cash, furniture is bought. So cash is decreased, so it should be credited. And the amounts are 3,000 each. Next one is cash sales are done. So cash account debited to sales account, rupees 2,500 each. Narration is been sales done. And for the previous transaction, narration is been furniture purchase. Purchasing furniture. That's also right. And the next one is purchases goods from Mr. X on credit. On credit means cash is to be given to Mr. X in future. So Mr. X is the sundry creditor. Sundry creditor is a liability, current liability. So increase in liabilities is to be credited. So purchase account debtor to Mr. X account, that is 2,000. Mr. Y's settlement should be done in the future date. Once again, the entry is purchases account debtor to X account. Amount is rupees 2,000. And write the narration afterwards. B purchases goods from Mr. X on credit. And next one is cash sales done to Mr. Y. This is also on credit terms. That is, Mr. Y will be paying to the company for the sales made at a future date. So Y's account, Y is a sundry debtor. If for the increase in sundry debtor, they should be debited or increased. That's why Mr. Y's account is debited with rupees 3,000 and sales is also increased for rupees 3,000. Whenever sales is increased, it should be credited, and whenever purchases are increased, it should be debited. And for the last transaction of the slide, journal entry narration will be being sales done to Mr. Y on credit. Amount is rupees 3,000. And next transaction is being cash received from Mr. Y. So Mr. Y had given the cash to the company. So the amount of Mr. Y will be decreased up to the amount 3,000. Since the debtor Y is decreased, he should be credited and cash is received. So receiving aspect is coming, so it should be debited. That is cash account debtor 3,000 to Mr. Y's account 3,000. Next one is cash is paid to Mr. X for the purchases of goods, rupees 2,000. It will be X account debtor to cash account. The sundry credited, X is paid off. So paying of sundry creditor means the amount of sundry creditor is decreased. Increase in creditor or liability should be debited. That is why X account debtor rupees 2,000 to cash account. For the previous transaction, the journal entry narration is being cash received from Mr. Y. And for the last one, that is giving payment to Mr. X. Cash payment. Journal entry narration is being cash paid to Mr. X rupees 2,000. And next one is bank interest is received. Bank interest receiving is an income aspect, or income aspects should be credited. And the amount of bank account will also be increased to that much. That is, here the amount is rupees 100. So it will be bank account debtor to interest on bank account rupees 100. And one more entry was there, received commission. That's also the same way of recording interest on bank deposit. That is cash account debited to commission account. Commission is received, so it should be credited. And cash account is also coming in. So cash account debited to commission received account rupees 50. Once again, introducing the entries. First one, for capital bought in, entry will be cash account debited to capital account rupees 10,000. Narration, being capital bought in. Next one, deposited cash into bank account. Bank account debited to cash account, amount is rupees 15,000. That is cash deposited into business. Narration, next one is furniture purchase. That is furniture account debited to cash account rupees 3,000. Next one, sales done. Cash account debited to sales account. Entry, amount is rupees 2,500. Narration is being sales done. And for the previous transaction, it was being furniture purchased. Next one is for purchasing goods from Mr. X. On credit, entry will be purchases account debited to Mr. X account, amount rupees 2,000 each. Next one, for the sales done to Mr. Y will be Y's account debited to sales account rupees 3,000 each. That means each in the sense, write rupees 3,000 as debit against Mr. Y and as credit against sales account. Narration, being sales made to Mr. Y on credit. Next one, for receiving cash from Mr. Y, cash account debited to Mr. Y's account rupees 3,000. Narration, being cash received from Mr. Y. Next one is for cash payment to Mr. X, X account debited to cash account rupees 2,000. Narration, being cash paid to Mr. X. Next one was received commission. Cash account debited to commission account, write the narration, being commission received, amount 50. The last one was received interest on bank deposit rupees 1,000, 100. So the entry for the transaction includes bank account or cash account debited to interest on bank deposit account rupees 100. And the narration will be being interest on bank deposit received. So for the session, we have discussed what a journal entry is meant by. It is the first step of recording accounting transaction. This is also referred to as recording transactions, according transaction, as and when it is required. It is the building block behind accounting transactions. And it usually records the transactions of business. It usually follows system of double entry, that is minimum of 2 accounts should be recorded. For example, purchase cash worth, furniture worth rupees 10,000, 1,000 for business using cash. It's an example of a transaction on how to record was given here. Furniture account debited to cash account rupees 1,000. Write the narration that is furniture purchased or purchase furniture. If the date is given, you are supposed to write the date here itself under the option date. For example, 29th May 2023. Just specify the date as it is. There is no need for changing the date. And the transaction should be entered in the chronological order. And the format of recording journal entries include dates, particulars, LF, debit, credit. You can see a T-shaped account. Write the dates under the column date. Particulars, write the transaction, what is happening with the narration. Next one is ledger folio or LF. There will be a number, just specify the number. That's it under LF. Next one is debit amount and credit amount. Write what is to be debited under debit column and write what is to be credited under credit column. For each transaction, the debit amount should be equal to credit amount. Then only the business transactions will tally in future. Thank you.